If you're a mortgage lender or if you're a realtor, what are you telling your customers and buyers, sellers? What are you telling your teammates? What are you telling yourself about inflation, interest rates, and inventory conditions? Now, the truth of the matter is markets are negotiated around consumer confidence. And if you're following and watching the herd, you're almost always doing the wrong thing. When it comes to talking about inflation, are you afraid? Do you have some fear? It's just another objection like any other objection you're going to be handling. But here's the number one way to combat fear. It's education. Take some time, go online, read some articles about inflation, read some articles about debt servicing and how that might relate to inflationary pressures on money. Look, here's a simple story. In 2008, consumer confidence around real estate was as low as it probably has been in the last 100 years. And why? It's because the run up that happened before 2008, a lot of people were, hey, we're going to get rich quick and we're going to keep flipping our house. We're going to keep making more money, more money, more money. And then 2008 came and we're at, maybe at the top of the market. And then all of a sudden there's this collapse. And then consumer confidence just went to zero. Well, guess what happened in 2009 and 8, late 2008, 9, and 10? Smart money, which is institutional and seasoned investors, they couldn't buy property fast enough. While the average consumer was sitting on the sideline, kind of licking their wounds. They followed the herd. They got burned. Needs-based realistic buying and selling is absolutely the best hedge against market conditions. Take a look at any 10-year period of time in basically the history of the United States. At the end of the 10-year period of time, real estate valuation was greater than at the beginning of that 10-year period of time. And this is true decade after decade after decade, no matter when you start and when you stop. What is that? Why? It's because inflation ultimately has pressure in the economy because of devaluing dollar. This is going to continue to happen. Real estate valuation is going up. Does that mean prices are going up? No, it means that it takes more dollars to buy and secure the same real estate. There has probably never been a better hedge against inflation than buying real estate. It also happens to be still probably the number one way that the average consumer is going to be able to have wealth preservation and be able to transfer intergenerational wealth to their kids, their grandkids, and I get it. Interest rates are higher today than they were before, but historically they're still well within a tolerable range. The problem is most of the public has been conditioned on thinking I can get a 3 because you get a 3% on what you get on your interest rate. These are just numbers. These numbers have to fit into an overall economic scheme based on the needs, the wants, and the goals of your particular client. Well, here's a crazy thought. Did you realize that if you secure more debt today and we're in an inflationary market, as you're paying off that debt in the future, you're paying it off with inflated dollars? What the heck does that mean? I don't know. For God's sakes, go online. Get some material, read a little bit about debt servicing as it relates to future inflation and what that payback of a future debt might look like with inflated dollars. Look, I'm not asking you to be a certified financial planner. I'm not asking you to get really uncomfortable with making recommendations about investments. In fact, I don't want you playing financial planner in your job. But here's the number one fear that you need to conquer about interest rates, inflation, and inventory. The number one place you have to deal with that fear is first in your own head. Because if you can't get real settled in the fact that, hey, these are just market conditions change month over month, year over year. The only reason it's significant is how am I going to understand that change? How am I going to be able to best explain it to my client so that they're not acting out of fear either? What they're doing is they're making logical decisions based on a big picture. And maybe their big picture is 10-year window, 15-year window. Maybe they're buying their retirement home. They're never going to sell it. It's not within their plan to sell it. So does it really matter? Does it really matter what the price is? Does it really matter what the interest rate is? It just matters that they can service this payment on a monthly basis and they have sustainability in that program. Don't be afraid. The number one way to deal with fear is educate yourself, and then start, letting that drift off into educating your clients. Like I said, I don't want you to give financial advice if you're not a financial planner or not licensed to do so. But here's the deal. I don't need to be a veterinarian to know the difference between a dog and a cat. Please hit that subscribe button, and don't forget, visit our website and schedule your free 30-minute evaluation.